Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Thursday, January the 28th. This is our pre-market trade plan setup where we take a look at the market macro to micro, take a look at the structure, and then drill down and decide where our trade levels are going to be, what our hypothesis and targets are for the day. This is a subscription room. We do live trading during the course of the day. We also do these pre-market sessions. I'm going to put up my contact information in just 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to contact me and come in for and join us, please send me an email at quantumleapfutures@gmail.com. There is no website, there's no blog. We do this all live every day. We have our live chat room. You will need a Skype account. Easy to do. It's free to set up. Please send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, there is over 300 of these pre-market sessions, or 300 days of pre-market analysis and trade plans. You can go back and review any one you want, and just do a search on YouTube for Quantum Leap Futures or Quantum Leap Trading. They're kind of broken up between the two. And if you like what I do, just follow me on Twitter at Crazy2. So let's get going. Let's first take a look at the news. Of course, we had core durable goods and unemployment claims. Durable goods just got crushed. Was expecting minus 0.6, came out at minus 5.1. They took it right down to the 74 area there. Unemployment claims are actually beat, came out less than expected, not a whole lot. But again, you got to remember with unemployment claims that people are dropping off the claims because they're just their claims expire and they don't count those. Core durable goods, again, less than expected. 10 a.m. we've got pending home sales. 10:30 we've got natural gas. That's about the only news that we've got left today that we've really got to worry about in terms of scheduled news. Earnings continue to come out, and for the most part, they're okay. I mean, there are some misses, but there's a lot of beats, and there's a lot of basically hitting expectations. So earnings continue to drive this market. Tomorrow, again, we've got today's the biggest day. We've got 113 after the market, and then we got 69 before the market, and then next week it starts to taper off some. We've got basically we've got 2 days. Is it 2 days left, or we got 2 days left of the market, so we've got to start looking at critical mass. Obviously, we've got a very high probability that we're going to hit critical mass down here, and that's going to be interesting. Our open of the month and the open of the year is 2037.75. We've got 2 days left of trading. Our daily ATR is running 47.41, so even if we'd have to expand our range greater than the 2 days. So we're gonna put the critical mass number in here right now. So we've got 47 and 41, 47, 41. So we got 94.82. We're trading 1881.50. So our critical mass number is all the way up here. We need this one. Our critical mass number is all the way up at 76.25. I'm going to put it 76.50 because it's actually 76.32. So if we don't get near here or above here, we basically have no shot at getting back to the month open. I think we don't have a shot in to do it anyway. So at some point in time, today or tomorrow, we could get some capitulation from the buyers, and the bears could get aggressive and take us down. But let's get into that a little bit later. Let's just take a look at what we're doing here. Oh, we got a review yesterday. Sorry, I forgot about that. Yesterday, we said that we'd likely make the FOMC around the 1890. That's what I was anticipating. I said we could make a move early in the day. They made this move, going into the European cash close, and we're up in the 1900s. Our FOMC number is 1904. We did complete the rule of 10, and then we chopped around, and we had the Fed news come out at 04, popped back up, did not break the high at the 10, rejected that 975, and then they just took it down and they sold it off basically most of the day. Found some support at the 64, 75 naked VPOC and that 65 microcomposite VPOC, and came up and found some support. We did have a neutral day. There's an argument for neutral extreme because we closed within 25% of the low. I think it's more neutral, but regardless, it really doesn't change what the thought is. Neutral day generally begets a neutral day, and we're likely to get a rotational today, a rotational day today, and break the IB to the upside and the downside. So it's, we got a triple distribution yesterday as well. We're going to talk about that when we start setting up our levels. And our POC was at our VPOC was at 1888, and we closed at 75. Currently, we're trading in the 81. I'm sorry, trading in the 88 range. So we're right at yesterday's middle distribution, and we're going to have a range in. We're probably going to trade this whole range inside of here and then break out to one of the upper or lower distributions. So we'll talk about that and how we're going to trade that when we get into it. Just looking at the macro to micro in terms of trends, I use a 9 EMA and a 20 SMA and a candlestick chart. I'm just looking for slope and separation and where it's getting challenged. You can see we violated the trend that we've had going for a couple years now, and we're currently trading below the 9 and the 20. Going to the weekly, we do have this tech gap. There is a FUBAR. We broke above the FUBAR, so we do not have a FUBAR, Mr. Sneaky, but we do have a tech gap that needs to be closed on the weekly. But again, it's on a weekly time frame. Always keep in mind what time frame you're in. We've got consolidation here. On the daily, we do have the downward trend, but we are challenging it, and we are getting consolidation, but they're having a hard time getting and holding above the 9 EMA, which is right down here at the 88 level, where our VPOC is from yesterday. But the trend is still, to the downside, but is being challenged. Going to the 4-hour, we do have this head and shoulder on the 4-hour. It has not been violated. We did not break the right shoulder at the 51, so it is still intact. And we got a measured move on that up to 1964 as the primary target, so keep that in mind too. And you can see basically we've got consolidation going here, but we are getting above the 9 and the 20 on the 4-hour. On the 1-hour, consolidation as well. On the 30-minute, you can see that we've got this move up and a possible start of a upward trend, but we are creating a bit of a tech gap here, so we could get some pullback. On the 15-minute, again, same thing. We're going to get a cross here at 83 and a quarter. If we break below that 88 level, I'd be looking for them to go to this, take out this naked cross here. So mark that down on your journal. That's on the 15-minute. And then going to the 5-minute, we do, oh, it's already been taken out. I was going to say we do have a naked cross here, but they took it out in the overnight session. And then you can see here we are getting what looks to be a FUBAR, possible FUBAR Mr. Sneaky setup, and that would take us down to close it out. It looks like it's going to be in around that 83 level. But the trend is showing to the upside. Taking a look at the big picture structure, you can see that the 8-day profile now, which is this profile right here, this microcomposite that I've drawn, is at the 1890. So value, we're right back up into this value. We left it overnight. That was one of the reasons why I thought we'd get the move up overnight, and we're right back into balance right now. Even the last 4 days, even the last 2 days, the most traded price right now and balance overall in this area is 1890. This you want to pay attention to very closely in terms of its value area. And the value area high is basically 1899.50. Look at it at 1900. And the value area low is down here at 62. So we can see a lot of chop in this area between that range, okay, very easily. A lot of undetermined fair value here. You've got 86.90, 78.75, 67 and a quarter. So we've got a lot of chop that can happen in this area. But if we break out above the value on either one of these, because this is such strong balance, expect a bigger move the next time we get outside of this. And I would expect if we break out this time, we'll break that 10, come up into the 15, 16 area. We were anticipating that as a possibility yesterday. And if we break to the low side, I'm looking for a much bigger move down. If we break to the low side, I think that critical mass and capitulation is really going to kick in, and we're going to come down into the lower areas again in the lower 1800s and possibly break into the 1700s. So taking a look at the overnight, you can see that we opened up just below the LVN from the lower and middle distribution. Tried to get into the middle distribution, couldn't. Took it all the way down. Didn't quite get down to the range low at 64.50 from the RTH session. You can see we had, I keep talking about these Mr. Sneakies and how that Mr. Sneaky is leading the way again. Here's your Mr. Sneaky, got a move down, definite direction, inside bar, waiting for the low to be put in after the Mr. Sneaky, have that respected by a higher low, and then your entry, okay, would have been right here, and you could have rode this all the way up into the 89.50. And then we basically just chopped around most of the night, tried to make a newer high, and then they just started selling it off. Basically, they started selling it off once we got into the European session and brought it back down into this 78 level. Well, one of the balance zones that we're in right now is that CHVN at 78.75. And then this morning, we got the move back up, and we've challenged the high, and so far we're rejecting it. So we could put a new high in the next 25 minutes. We're within range, so we'll have to pay attention to that. But so far we have the weekly ATR target doesn't change. The daily upside ATR target is 1913.75. Funny, that was one of my targets. Yesterday I was front running this 14. And then our daily downside target is at 1848.25, just below our key support. And our CPR, percentage of range, 62.50. Our floor pivot is 84.25. Our overnight high so far is 95.75. Our overnight low is 66.25. We've got the overnight VPOC, which is not likely going to change, at 78, which is basically just below the value area low from yesterday. And then we got this LVN at 80. $80.75. And one right here at 83. Got the floor pivot there, so I'm not going to worry about that. That's about all the information I need from the overnight. So right now, if we open up in this area, we're going to open up in the middle distribution. I'm expecting probably a trip through this middle distribution this morning. So to the downside, I'm going to be paying attention to this 80.75. If we get below that, I'm looking to come down and test the overnight VPOC and the value area low here at 78.75. But I'm actually going to be using the 77.25 as my trade area. Below that, I'm going to target the 75, which is the close, and a move down to test the CLVN at 70. And then below that, I'm expecting the overnight low to be taken out and come down. The gap close is down here at 61. There's really not much below the 70 area that we have to pay attention to, except for the 64.75 where we bounced yesterday and the low of the day. So you can put another trade area if you like, because if we break the 64.50, I think you got a really good trade down into the 61, and I think beyond 61, there's basically thin air below the 60 area all the way down to our daily downside ATR target and our key support level down here. So I'm going to put this, because I really want to demonstrate the key support. Anything below 48, we've got all our targets to the downside that we've been talking about. 41.35, the year low. Our weekly ATR target still down. Well, actually, that's changed because we went to 1910. 1910 minus the weekly ATR at 74.82. That changes to 1835. Right there at that naked VPOC. And then the low of the 2015, and then all our targets down here. We'll talk about them. if we get down there. I'm not sure we're going to get down there today. I'm expecting a rotational day and a test of the upper distribution and lower distribution to one side or the other. To the upside, inside of here, there's not a lot to guide us by. You know, you can use the 91 to the 90.25 level. I'm going to use the 91. You know, it's a weak place to lean against right now, simply because of the fact that we've been slicing through it so much. But it's going to be a guiding, call it a guiding line to you know, upper or below. I mean, we've got the 90, which is pure balance. If we get below the 91, I think we go to 90 and we actually come down and take out the naked VPOC. We've got the VWAP, the midpoint, and the VPOC all sitting right here. So I fully expect, if we do not get above this 98 level, remember 98 is the LVN 99.50. So I'm going to use the 99.50 to 98.50 as a trade zone. I want to be short below 98.50, and I want to be long. Now, if you want, you could use the 96.75, but I think I would use it to the short side rather than to the long side, because if you try to get long here, you could bang into the 98 and they could reject it, come down. So you might want to use the lower number as a possibility. You know, obviously, it looks like with 15 minutes to go, we're either going to go up and take out the overnight high and test this 98 level, or put in a new high in the next 15 minutes. So, you know, as long as we're above this 91.50 area, I would be thinking that we're going to take out this overnight high within the next 15 minutes or within the next 25 to 30 minutes. If we get below this, then I think they might start the rotation down towards the VPOC and towards the lower end of this distribution. Above 98, target is going to be the 04 level. That is return to the scene of the crime. So I'm just going to call it scene of crime, FOMC number. If we get above the 99.75, you can use 100, or 99.50, you could use a 1900 if you want. I think they're going to, but they did not respect that 1900 yesterday. Remember that. They sliced through it like butter. It was one of the trades I got in trouble because I shorted just in front of it. And I expect them to go to this 04. We've got the value area high at 7, and then obviously back into the rule of 10 and the break. And any break above 10, I'm expecting to come up into this 15 level. 18 will be resistance, and then our daily upside target is at that 1375. So I'm expecting if they get back up in this upper distribution, we're likely to break above the 1910 and come up back into this 15 level, possibly fail off of the 18. But to get above 18, remember, we still got weekly range available to take us up into the 26 area. And anything above 26, the next key level above us is up at 32.75. So that's what I'm looking at in the ES. We're currently sitting right on top of, you know, the Keltner center line, right, you know, above that 90 microcomposite VPOC and the overall balance for the last 7 days. If we get below that, we've got the developing value area high on the 24-hour is right there at the VPOC at 88, and then the lower Keltner line takes us down to that 85 level, most likely to the pivot at 84, and that 83 and a quarter I was talking about earlier. I've put that 83 and a quarter as a target down here too. And then if we hold above here, a move up to the upper Keltner takes us into that 96 area, and a takeout of the overnight high and a test of the LVN between the middle and upper distribution. Quick look at gold. Gold has come back and bringing in, so far we've got today, the most traded price is 18. They're testing the range high from the level that we broke out of. If we get below the 1111, look for them to come back down into this 1102, 1101 area, probably test the 1100. If we can hold above this LVN at 1113, then I'd look for a grind back up into the 18 and hopefully chop around here and hold above this prior range. If we do get below 1100, and I'm looking for a much bigger move down in gold, but the main target below is going to be 94.80. As always, that's going to complete our pre-market trade plan setup. Trade well, trade safe, and we will catch you on the flip side.